This conference will now be recorded.
All right, good morning, everybody. This is Greg Morton. It's Sunday, August 1st, 2021. This is the weekend update for the Greenville Eastside IBD meetup group, as well as the Stockyard meetup group. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses, so we want to learn first and only then invest. And of course, Canslim is the registered trademark of Investors Business Daily. So this weekend, we'll look at the M factor like we always do, market review and market direction. It was a roller coaster week last week, and we're going to have the same thing again as we look at how many EPS reports are coming up. Some select growth breakouts are working. I'll mention recent interview as well as upcoming and prior meeting information. So the M factor, as O'Neill teaches, this is the most important letter in Canslim. If you are not in line with the M, it's just not going to work. Breakouts don't work in bear markets or corrections is sort of the bottom line. So currently, O'Neill teaches us to look at three things. We will always want to remember to interpret, not predict. The three things we look at to diagnose the current market in this order of priority are the action of leading stocks, the actions of stocks owned, and the market pulse, distribution day count, price and volume on the indexes. And then I supplement that with my Excel spreadsheet, also known as the coloring book. So let's switch to MarketSmith and look at the indexes. Then we'll look at the coloring book and the group teaching portfolio also. Exit this. All right. So here we are on the daily NASDAQ. So this week, again, we can see started out up there at all-time highs, still above the 10 and the 21-day moving average lines, everything stacked in the correct order. Relative strength lines a little bit flat. So, overall, just sort of a sideways week, and I think it finished down a little bit. Going to the S&P 500, same thing, had all-time highs, all-time closing high during the week. Moving average lines are stacked in the correct order. So everything is looking decent there. NYSE, the 10's under the 21 and the 50, so that's not great. But again, still holding all those moving average lines. Dow, same thing, still sort of stacked in the correct order. Again, all-time highs, all-time closing highs this week on some of these days. And then the small caps, which have been lagging, still sort of mired into the 50-day, battling there at the 21-day. They are not stacked in the correct order. So this obviously is the weaker, along with the S&P 600, sort of the same situation. This would be nice to see these improve, but that's sort of where they are. If we flip over to the coloring book, we can see in the last 25-day window, I think I kind of moved that down one, but the orange dot, I have 9 buying days and 9 selling days, so sort of tied there. We can see we have 4 distribution days on the NASDAQ, 1, 2, 3, 4, so they're pretty far back and scattered out a little bit. We have 6 on the S&P 500, and I don't think any drop off this week unless they drop off due to the gain rule. So they were sort of clustered back in here. And then on the Dow, we have 4. And then this week we had some improvement on the MMTS as the NYSE went to yellow and then green. And the Russell and the S&P 600 improved a little bit as they flipped up to yellow. Market school exposure count is at 4. Power trend is still owned, and the window of opportunity is still open. So we're clearly still in an uptrend, even though this rotation and sort of churning among the leadership is still occurring. And you can see we had some breakouts this week. They're listed in there. So you can go back and study some of those charts. We also had some gaps this week. So if we go over to the group teaching portfolio, decent week, strong Friday, primarily due to Dexcom. We currently are 74% invested on a cash basis, no margin used, and up 14% year to date. So that improves some, again, basically based on Friday this past week. So we have a total of 9 positions, but it's really 6 full positions. Dollar-wise, the only one in the red is Twitter, which hadn't triggered a sell rule yet. We had 3 earnings reports last week. I just colored them blue because we're past those. All of those had enough cushion to hold. 2 of them just held steady, DT and AVTR, and then Dexcom gapped up. So we added to that, even though it's not my buyable gap up setup, it was an add-on buy point. And then we have 2 more earnings reports this week in Zebra and Tech. So we'll have to look at the cushions and make a decision on whether to hold those. Both of them do have some cushion. Just have to go over to this page and look at the cushion on each lot and what it is overall also on the day of earnings. So you can sort of see where those are. 10.4% overall on Tech and 6.69 on Zebra. So we'll study those and make a decision as we go through this week. So go back to the presentation. Okay, we looked at all those. So some general notes. Weekend routine is still showing some watch list candidates in the growth sectors that we want to see. Recent breakouts are sort of a mixed bag. You have AMD, Align, BNTX, which are behaving, working so far. But then you have Amazon, which headed downstream on earnings, and Pins sort of popped the balloon this week and plunged on earnings. Some select IPOs are still acting well. Again, narrow leadership. And then we already saw the MMTS upshifts this week, and then the buy-sell day count, still a tug of war, deadlocked at 9 buying days, 9 selling days in the last 25-day window on the indexes. So overall, it is still definitely a stock pickers market still with really narrow leadership. Make sure you're doing a weather report, not a weather forecast. No way to predict. And same thing we've been talking about for 3 or 4 weekends. It's like driving a car. Is it time to be easy on the gas, easy on the brakes, or coasting? It's clearly not pedal to the metal. It's still an uptrend, but it's not everything's working like it did in 2020. And it's also not locked down the brakes. So it's somewhere in between. I would say this past week still says, light accelerator once again, and consider to carefully check the oil level on the stocks you own that have earnings reports coming up. So still cautiously optimistic, another important week ahead. And sort of my key thought is to be super disciplined with the watch list process. You want the Michael Jordans for your team. The watch list process is a process of exclusivity, not inclusivity. So not every stock gets a trophy. This is not Pop Warner football. So speaking of Michael Jordan, just remember who he played for and why we want him on our team. So secondary indicators, still a lot of bullishness. It's not as extreme. Bull bears are 52.6% bulls, 16.5% bears, kind of low on the bear side. Put call ratios, middling, 0.72. It had gotten extremely low, lack of fear, down at 0.40. IPOs are still gone wild, near a 5-year record high percentage of IPOs overall compared to stocks on the NYSE. And then again, the indexes are once again not far from being extended. So IBD Live focuses a lot on the percentage above the 50-day, and so the Qs are currently 4.4%. You get up in that 6 or 7% range, and we certainly have seen a lot of pullbacks happen. Sometimes just a real bad one day, and sometimes a little bit longer. So the week ahead, same slide I used last weekend. We're in the middle of earnings seasons. It's a roller coaster. We're still in low dog days of summer volume, and decreased volume brings increased volatility always. So we have to be ready. Market Moving Events. Mainly, we just have a massive earnings week again. So you got to know if you have rules for buyable gap ups as well as add-on buys on stocks you might own. IPOs are still gone wild, although this week we just have 9 starting the week. There were 25 last week and 20 the week before. So here were the earnings reports. You can see the numbers for this past week. And then when we look at this week, we see massive numbers again, 300, over 300, over close to 500. So Tuesday, Wednesday, Thursday, before and after are very busy, to say the least. So let's switch back to MarketSmith. We'll just look at a couple charts for this weekend. Some of these we've had in there, so I'm just flipping through them. So NVIDIA, if you're taking profits at the 20% profit goal, you could have already been out of this one. That's what we did in the group teaching portfolio. And some may still be holding in. It just had that big split for one, so we'll see how it acts. Dexcom gapped up nicely on earnings, on big volume. We'll look at this at our next meeting and talk about why it might be a true market leader. So we'll walk through this one in detail and cover the conference call. Snap the RS line up there Friday. So, new high compared to recently. And this also just came through an all-time high. So it was breaking out of that area also. AVTR, this one's in the group teaching portfolio, had earnings this week, just kind of held steady, which is fine. We're trying to avoid the gap down. We like it when they gap up like Dexcom, but it's okay if they just report good numbers and hopefully continue the uptrend with some volume discovery. Snap, that one gapped up and so far has held within the blue zone. Twitter is one we have in the group teaching portfolio. This one's the one that's slightly underwater, struggling to get traction. So we'll see if it works or if it triggers our stop. DT reported earnings this week. This one's in the group teaching portfolio. So again, just kind of went sideways. It's had a natural reaction. So stops have been moved to just below here. So even if we get stopped out, basically it'll be break even or 1 or 2% gain. We don't want that to happen. We want it to get up in the profit zone. Amazon, ugly gap down, just sliced through that 50-day like a knife through hot butter. And Pins did the same thing, even worse, about an 18% gap down. So that's why we have to be prepared for earnings and have our rules, how much cushion you have to have. So depending on where you got in this one and how long you've had it, may not have been possible to hold it through earnings. And then of course the headline IPO this week, which did not do well, was Robinhood. I guess the sheriff of Nottingham caught up with them. IPO'd at 38, did not close above that level, spent the second day of trading completely under that level. So we don't like to see them do that. That's poor action by an IPO to be under that IPO price. So those were a few charts. August meeting is coming up. This will be Tuesday, August 17th, 2021, 7 p.m. Eastern. As always, we'll look at the M factor in detail, look at some watch list stocks, we'll look at the IPO market, we'll look at stocks the group picked, and then the educational topic. I'm still working on that, but maybe go over earning seasons and the cushion rule and perhaps a new rule to supplement or in addition to the straight cushion rule for holding through earnings. So I think that's what we're going to talk about in some detail. So the July meeting, of course, we walked through the newspaper page by page, showed how to use it in a weekend routine. And then we also looked at the buyable gap up rules. So if you sign up for the August meeting, if you've never signed up for a meeting before, I'll send you a complimentary copy of the July meeting recording and slide deck. So that was all the stuff we covered in July. The videos, including this one, are on my YouTube page. So that's where you got to this. So if you'll like and subscribe, that would be great. Prior meetings are available. You can email me, same cost as attending a meeting, which is just the $10 tuition. We covered sell rules at length, written sell rules in January, February, and March, and walked through the process to help you write your own set of sell rules, which is what you really need. That will help take trading to the next level. So those are available. There's one on weekend routine, and there's one on Canslim A to Z. So the green ones are the ones that are probably ordered the most often, and that people seem to get the real good positive feedback on those. So I did an interview a week ago with Richard Moglin, so that's on his YouTube channel. Spent a lot of time talking about IPOs, so you can check that out. And then contact information, meetup sites, Greenville East Side IBD meetup. That's the one with a lot of resources on it, on the message boards. Go to the More tab and then message boards. Then the Stockyard meetup site is where you sign up for the monthly meetings. You can email me about the prior meetings. You can follow me on Twitter. And then you can like and subscribe on the Stockyard YouTube page. So that's it. Hope you have a great weekend routine, and be interesting to see how this week plays out, and we'll check back in next weekend. That's it. See ya.